Let's stick with the business theme and go to business news now with Nicholas Poynton. Hi, Nicholas. So we talked about this before, inland revenue and crypto investors and how they were planning to do a bit of a clampdown. So do we know exactly how they're going to do that now?
Yeah, they've finally given us a bit of a heads up there, because at the time, you may not remember, but when I spoke about this at the beginning of the month, this was about IRD, crypto assets, how they're going to tax this area. Crypto assets, they've tended to exist in quite a grey area. IRD, they put out this guidance where they said they're going to treat crypto assets like property for tax purposes. And at the time, you actually asked me a really good question. You asked, well, how will IRD actually know who has or who hasn't got crypto assets? Well, it appears that IRD has given us an answer to your question, albeit about 3 weeks late. So they have actually sent out letters to all the crypto firms in New Zealand requesting that they hand over their customers' names, their dates of birth, their addresses, as well as the types of assets they own and the value of those assets in New Zealand dollar terms. And why this is really interesting is the fact that IRD hasn't publicly announced this. It's the firms who have received the letters. Those are the ones who started making some noise about this over the weekend.
Are they compelled to give it up?
Well, this you raise a good question. I'll get to that in a moment.
Okay.
So the crypto asset firm I spoke to today says this move isn't actually too surprising, because it seems that the IRD is really following the lead taken by tax offices in the US and Australia when it comes to firms handing over their customers' data. The main reason why it was disappointed, though, is because one of the core tenets of cryptocurrency is privacy. And it's not necessarily by those people who engaged in dodgy dealings, but it's by people who like the anonymity that this form of currency gives to people, and the fact that it effectively cuts banks out of the equation. It's very decentralized, and this sounds like I'm quoting all these buzzwords, but this is what crypto investors really like about it. But the firm I spoke to today, they actually initially sought legal advice about whether or not they actually had to hand over this personal information. What they found, though, after consulting with a number of lawyers, was that there was actually no legal grounds for them to be able to refuse this. So they are in a situation where they are going to have to comply with IRD's request. That's what they're in the process of doing right now. But this is just one firm, though. Keep that in mind. This is a really interesting space, and judging from some of the comments I've seen in sort of like cryptocurrency Facebook groups and forums, there are a lot of people who are upset about this. So it remains to be seen whether or not we'll see any of these firms who will take a firm stand and not comply with the IRD's request on this.
Well, it's kind of interesting because when you sign up for the bank, you have to fill out a form with a tax rate for, you know, if you're earning interest, etc.
Well, it seems only fair that you would have to pay interest on or pay tax on these assets, right? But I guess these people have sort of enjoyed the space that they've been in for quite some time and don't want to comply. But having said that, most crypto investors do actually pay their tax. There is a small group who don't, and most of the time it's because people don't actually understand their obligations, and there's an even smaller group who try and skirt the system.
Well, I love this story. Do come back and tell us more as it builds. Okay, so one of the country's biggest companies has today announced it's expecting to make less this year. Which one is it?
It's A2 Milk.
Oh, okay. So it sent the NZX on a bit of a upsy downsy, did it?
So this is the country's second biggest stock, A2 Milk. It revised down its earnings expectations for the half year. It now says it expects to make between $725 and $775 million for the half year. It's no small amount, down from $805 million the year earlier. And the reason because of this is, well, due to COVID-19, which has put a lid on the sales through the Daigou channel. And that's essentially when Chinese tourists come to New Zealand and they buy up lots of our goods. In this case, it would be A2's infant formula. They buy lots of this, they buy it by the caseload, and they would take it back to China, or they'd send it back there, and then they would go on to resell it. Well, we don't really have tourists at the moment, and this has affected A2's sales of its infant formula, and it's seen sales of this really plummet. However, when they put out this announcement to the market at about 8:30 this morning, they really reassured everyone. They told them that their underlying consumer demand in China is still strong, and they believe the short-term impact of this will be only temporary. But in reality, that sort of hinges on what really happens with our border restrictions at the moment. And the market, when they heard this, well, they didn't really like it. Its share price, well, A2 Milk's share price, it fell by 9.7%, and that's about $1.79 per share, and let's take it down to $16.65. But A2 Milk, it's a really big company. When it moves, the market moves. So when the market opened for trading this morning, it fell by 2%. But what we've seen is it seems that the market or investors' confidence have really picked themselves up, dusted off for the dirt and grime, and they believe in market trading really rallied over the course of the day. And the NZX 50, it finished up slightly by 0.04%, or by 5 points. That's to 11,802. And while I'm on the markets, our own dollar, it's up 65.6 US cents. It's at 92.9 Australian, 51.3 British pence, and gold is essentially unchanged. It's at 1,861 US dollars an ounce.
Thanks, Nicholas. Nicholas Poynton with our business news there.